thanks for joining me in my market report. My name is Mike, and my market report is about mortgage rates. For those of you new to the channel or videos, we kind of like to create these videos on a daily basis, kind of show you what is impacting mortgage rates on each and every day, and what to kind of look for at the day ahead, or at least the week ahead. Whether it be economic data, whether it's headline news or different sentiment that's going on in the markets, we'll kind of give you the inside scoop of what's going on. And hopefully, if you guys are in the market looking to buy or refinance, uh, this might help provide you some educated information to decide to make a decision for yourself, whether if you want to float or if you want to kind of hold on to see if rates get better type of thing. This will hopefully give you a little bit better gauge as to what's working out there. And a little bit about myself is I am a loan officer. We do work with people who are looking to refinance and purchase. So please reach out if you're in that area. Meanwhile, also we here to answer any questions, whether if it's mortgage related, like rates or mortgage programs out there. We do have a lot of different programs available, even though COVID did take out a number of them. A lot of them have worked its way back, and we do offer quite a few, whether it's bank statements. We recently just came out with our own physician loan. So if you're new to being a physician or dentist or like a medical professional, please reach out. This program may be good for you if you're looking to buy. This is a good program for those. Um, First-time home buyers and even jumbos. We still got some good jumbo programs here as well. Um, Without further ado, why don't we jump right into the report? We'll start off with the economic data today, and it's basically just one item here. It's the durable goods. So durable goods, this was actually revised a little bit lower down to 0.8% for the month of June, and forecast count for a 0.3% drop, and it dropped 0.1%. However, if we take out big ticket items like transportation, it was up 0.5% in the month of June. Forecast count for 0.5%, and it actually exceeded that by 0.7%. So it's actually not that bad. However, what's making the numbers look misleading is the lack of plane orders, or like airplane orders. So those big ticket items can kind of skew the numbers here a little bit, and because there's a lack of orders for airplanes, that's what brought the durable goods down. However, if you take those out, you saw how decent those numbers are. Let's jump ahead. One other thing that could pop up here that could move the market, especially the mortgage-backed securities, is we do have a 5-year Treasury auction going on later today, and this could potentially shift the markets a little bit depending on the outcome of this. And then something else I like to take a look at is every week we get the report from the MBA regards to mortgage activity report and applications. And what we see here is that we saw an increase in both refinance and purchase side of things. So both refinance and purchase side of things from last week improved. Those loan applications increased. So let's take a look at the headline news. Stocks are up. Stocks have been kind of taking their cue back from the cues from Fed's Kaplan. Before he was pretty adamant about tapering sooner than later. Now his stance softening, and they're kind of viewing that as more like the Fed as a whole. Before that, they thought they were going to come in much sooner than they expected when they saw the FOMC minutes. But when he kind of made that comment, and he was pretty much adamant supporter of it, and saw that softening, they kind of view that as a potential that, hey, it's going to eventually happen, but it's most likely not going to happen anytime soon. The Fed's going to take its look at, with the rise in COVID cases, they're going to take a look at these and kind of take its time in terms of what's best for the economy. So most likely they're not going to start tapering at the September. It could be more like the November meeting before we hear anything about talk about tapering on that as well. Meanwhile, Congress kind of was passed. It looks like they kind of worked out something where the infrastructure and spending bills will be moving along. So it looks like those were kind of worked out, negotiated, and moving forward. And so let's see how this is playing out with the mortgage-backed securities. Yesterday we took a big nosedive towards the end. We ended up closing down 11 basis points. Coupled with today, we're down about 8 basis points. As you saw, we were way down here, even past the 100-day moving average. Testing the 50-day moving average right now. We're even up a little bit. So we're in kind of an uncertain status here. And when we usually see these, sometimes we get a little reversal here. So we could get a little pickup here, hopefully, the next day or two with this uncertainty here. But because of the yesterday's late decline and today's current situation, lenders will tend to have a little worse pricing than what we saw yesterday. So just give you a heads up, yesterday's pricing is going to be a little bit worse. We're going to be comparable to what we saw on Friday, as you saw here, that same level, we're kind of in that same range. So pricing should be comparable to what we saw on Friday's close here. Yields still working its way up past that technical level, coming up to the 50-day moving average. We're sitting at 1.334, so just at base at 1.33. Next level up is about 1.37. So again, if this holds, we got another level, technical level here at 1.337. I'm sorry, 1.37 range here. So so hold on. Tomorrow will be a big day. We start the Jackson Hole Summit. So that will be something that we will be looking at. And then Friday will be a big one because that's when Fed Powell will be speaking. But another thing that will be important, it hasn't been mentioned as much, is the PCE will be released. They'll probably want to take a look, see what inflation is doing, as that is the Fed's favorite gauge for inflation, the PCE report, not the CPI. So stay tuned on that as well. All right, folks, if you guys got any questions, again, please feel free to reach out. If you guys like these videos, we greatly appreciate your likes. If you can hit that like, smash that like button, we really appreciate that. That helps out our channel. Otherwise, we'll look forward to see you guys in tomorrow's video. Thanks so much for watching. Bye-bye.